Welcome to APABI Focus. For this special version of the newsletter, we're going to be talking a little bit more in depth about the topic of stablecoins and RegTech. But before we get there, I kind of wanted to actually introduce the topic with an analogy to cybersecurity. And back in the old days of the hackers, who always had a hoodie, of course, they would be subject matter experts. They would look at every line of code and find the mistakes themselves. Similarly, back when the financial system could take, 5 days to settle a transaction, depending on what area it is, you could have time to look over every transaction. So what if you added a couple extra zeros to a trade? Somebody might discover that in human time. Now, as the financial system is moving faster, things are becoming more automated, which can be a benefit. But what's interesting is that the amount of work never actually seems to go down. So, for instance, with cybersecurity, we have security operations centers who every day receive many false alerts. They have to figure out what's real within that. Similarly, in the financial system, many of the lower level processes are being taken care of, but now more attention is moving to higher level policy decisions. So what I'm getting at with the regulated stablecoins is that from the user perspective, it doesn't look all that different from a bank account. But from the bank's perspective, we're thinking about this governance, maybe even a little bit more than the reserve aspects, which are important, but they're maybe not quite as important as the governance part. So I wanted to get your reaction to this, and today we're pleased to introduce Mark McKenzie, who is a senior financial sector specialist at the Southeast Asian Central Bank's Research and Training Center. And you're specializing in central bank digital currencies and AI, which are two very pertinent topics for this discussion. So welcome.
Okay, it's certainly a pleasure to be here, David. Thanks for your kind invitation. The topic, the subject that you have mentioned is, I think it's quite timely. It sounds quite interesting as well. Lots of development taking place in that space. So I'm quite looking forward to a fruitful conversation as well.
So what do you think of this this idea that the governance layer is becoming more important than, or at least more innovative, more interesting maybe than the reserves?
I mean, I think it's, we perhaps, if we speak specifically on stablecoin, David, we perhaps consider the two major players, Tether, which is the USDT, and the USDC, which is Circle, Coinbase as well. The genesis of this governance is really the opaqueness surrounding, well, it started with the opaqueness that surrounded Tether in particular, and how do we get a clear line of sight as to what it is. And governance is critical from the perspective that obviously knowing who the players are, where these entities are located. Governance is critical from the perspective in terms of accountability and transparency. The reserve, I think, is still very much important, but it's really if you take it from a governance perspective, it's really about the auditability, the attestations, and those kind of requirements that are key today.
I think a lot of APABI members are thinking about a lot of different issues with stablecoins. One of the topics that's really big in Southeast Asia, which, as you know, since you're based there, is the networks of fraud. How do you think that stablecoins are going to either potentially make these sorts of controls easier or harder? Because I think actually there are kind of both two aspects to this at the same time.
I agree wholeheartedly. I think on the one hand, what regulation does, it brings the new players, the issues within the regulatory floor, the regulatory parameters. So I think that that's a good thing. So we're able to trace and track more as well. But I do think that stablecoin brings something else with it, which is speed, somewhat similar to fast payments, instant payments. And you mentioned Southeast Asia, where frauds and scam is pretty much which the region is pretty much a honeypot for frauds and scams. And they have made tremendous progress on fast payments, instant payments. And now we have to think about how do we, given the speed, we need to develop more predictive tools as against prior to fast payments and the advent of stablecoin, where it was more post-transaction monitoring. So we need perhaps more, and technology does give us the tool to be more predictive. That's one. Technology also gives us the tool to perhaps inject logics and circuit breakers, which could become critical to stem the flow of fraud and scam. I think the other advantage here is that having regulations in place, it enables traceability as well. So I think those are good things. Perhaps the downside of this is that there's no sense in terms of harmony with how the legislation is emerging. So different jurisdictions have different requirements, and that create an opportunity for the nefarious actors to cherry pick where they do transaction.
Regulatory arbitrage. That's the
Yes,
term people like to use.
yes.
Yeah, you mentioned AI predictive analysis. How do you think AI is going to affect? Well, I mean, we could even talk about from a personal perspective, as training institutes. How is that going to affect the way that we do work in the future?
Oh,
On this topic, of course.
we could go back in terms of we're talking about frauds and scams and stablecoin. I mean, obviously, from some of the interactions that I've come across is that AI is definitely aiding the speed with which we're able to track and monitor fraud and scam compliance and all that kind of stuff. If I take it at a personal level and to answer a question that you asked, increasingly I've been learning how to use AI and encourage your members to get familiar with the tool, because it's a tool. One of my mentors encouraged me to build something with AI. All right. So I do think that AI will have profound impact on how we work. I've seen enough that its capabilities, and for example, in research, in document reviews, I've seen tremendous potential. It is the accuracy has improved tremendously. So I'll say it's going to impact how we work. I'm encouraging, just as my mentor is encouraging me to do, that we should all try to get familiar with the technology. But there are genuine concerns that some jobs will be lost. There are genuine concern that we may become overly dependent on it, and the de-skilling may occur. So we have to guard against these things. My final point on this subject, I do think that we have some fundamental questions at a community level, national and global level to answer is if we suddenly all become more efficient at what we do and we have to work less hours, then the question becomes, what do we do with the rest of our time? Because as human beings, we must be productive. And if jobs are lost, what do we do about the displacement? So I do think that those are fundamental. But I'm reading a couple of books now, David. I mean, I've just read Akramoligo's Power and Progress. It's an excellent book. And I'm reading, I mentioned Soshahana Zuboff, The Age of Surveillance Capitalism. I do think we have fundamental questions to answer on AI.
Yeah. So you mentioned a number of good points, and I think one of the, for instance, like a lot of the tech sector, we've been thinking about these issues of privacy, bias, and how can the banking sector deal with this topic of particularly bias? I guess when an AI might read your documents or something, it might come up with a judgment, and that judgment affects where you can spend your money. That becomes a very critical issue. How can we deal with this issue as a sector?
Well, I mean, I think what we have seen, and again, this is an area that we have to continuously zero in on. If you look at a lot of the regulations that have emerged, the focus is on ethics and governance, and the subject of bias is pretty much a part of it, right? So let's just explore some of this in a bit. Even without AI, we know biases exist and decisions can be based on bias. So we know that before. No, AI is driven, it's trained on data. So, we could perhaps think about models that are trained on data that has historical biases in it. The beautiful thing I think about the science and mathematics is that there are tools. For example, you inject diversity in the data set that you use to do the training. I mean, obviously, you have to be aware that the bias exists in there. So that is where continuous testing to look at the results and see if the results are yielding those known biases. And then if you have parameters, I mean, we'll use as an example, loans to men versus women as an example. So you know that obviously, even without AI, more loans go to men than to women. So perhaps in the statistical models, because we're using technology, then you eliminate attributions of biases, and obviously just continuously vet to see if the results are pointing into one particular decision over other possible decisions. And if that is the case, why is it? Is it because of the entrenched bias from the historical data? And then perhaps you can, I mean, and again, because it's technology, perhaps, and I'm not a mathematician, create synthetic data to try and eliminate some of these biases. So there are means and ways, and I do think the regulation that is emerging, that is one of the big areas that we have to pay attention to. There are others as well.
Yeah. Synthetic data is a very interesting topic, which I may not completely understand, but maybe moving now to a regional perspective on stablecoins. What are the different value propositions for different countries, say within Asia? Or what are the which countries might be most suited to develop a regulated stablecoin, and what sorts of benefits can they get from it?
Wow. Wow. We'll perhaps look at the jurisdictions that have issued regulations are in an advanced stage in terms of issuing regulation. I mean, we can think of Japan, Singapore, Hong Kong, I believe Korea as well. All right, so that if we take this region, then we can go to Europe where you have the MICA regulation, and you have the US where we have the Genesis regulation. I do think that the motivations across the different regions are different. I do think that I do think from the US perspective, it is traditionally a very deep, very well advanced, very well developed financial systems. So there is not that, in my view, there's not a lot of worry that deposits will necessarily migrate from the banking sector to the stablecoin issuers. All right? I don't think they have that much of a concern. I think. Plus, they have the big technology firms as well. All right. I do think for Europe, tied to this discussion, is the issuing of digital euro. So the US isn't talking about a digital replica of the US dollar. They're not talking about that. In fact, they get that when their private issuers issue stablecoins. They get that. So they don't need they don't need to talk about central bank digital currency in the US. Europe, on the other hand, have a slightly different motivation. Number one, they don't have the big technology firms, the big issuers. So how do they maintain competitiveness with their US counterpart? And I think that is a part of the big driver for the digital euro. Under the MICA, you have the asset reference token and you have the e-money. And I do think that it's whether or not big banks in Europe will take up the requirements on the MICA and issue a stablecoin. Now, when we get to emerging markets, and we're not necessarily talking about, say, a Singapore or a Hong Kong, I mean, because those are, if you think about the stages in terms of the depth of those and the sophistication of those, the financial institutions and the financial market in Hong Kong, Singapore, Japan, it's, they compete with London, New York, right? So you have that bit. It is the other emerging market, if you think about countries with high inflation, countries with poor internal governance, and in that we had monetary policy, blah, blah, blah. Remember, part of the promise of, say, a stablecoin is to bring stability. So if you have a relatively poor macroeconomic management, then you would perhaps be susceptible for your markets to use stablecoins. And these stablecoins are not issued in your jurisdiction. They're issued by a large US firm. So perhaps you strengthen your macroeconomic policy, your economic governance, and perhaps you consider also having your own stablecoin as well to stem things like capital flow. All right, so that would be the emerging market perspective.
Okay. Well, I think that's the time that we have today.
Wow.
So thank you for appearing, and we're happy to hear your insights.
Okay, thank you very much for having me, and I trust that your membership have found it quite useful, and do please, happy to be invited again.
Great. Oh, bye.